Hi guys, just gone midday here in London. We'll have a quick look over some of the markets. You can see S&P limit down. Took all of 15 minutes once futures started trading last night around 10 p.m. UK time. S&P, Dow and Nasdaq all 5% down currently. However, the SPY ETF looks as though it's going to be down just around 9%. Which of course, if that translates over to futures, we're going to be the 7% limit down upon the open at 1:30 as well. As you know, a good website to use, the CME for limit downs, will mark up the places for 7% where price will pause for 15 minutes, can go no lower, 13% where another 15-minute pause would be, and 20% they would shut the market. So can we see that? I don't think we get the 20, but definitely on the open at the moment it seems that we're going to have a 7% limit down, where it's likely to get very choppy as people want to get out of the markets. You might see a little spike higher as people exit the trade early to go limit down once again. So you can see after Friday's biggest move in stock market history, according to Donald Trump, it hasn't lasted too long. A couple of longer term levels just to be aware of here on the S&P. We're going back now to the 2009 low. You see this trend line marking up along with the Boxing Day 2018 low. Massive area, I have to say, around 2250. A long way away from where we're trading, but I'll be keeping an eye on that. Just that 2018 low, which a lot of people are talking about how that needs to be taken out before we can even think about moving higher. A couple of murmurs as well about the stock market potentially closing. I don't think that's going to take place just yet. Oil as well today took out the $30 handle, and we hit a strong level of support around 29 bucks. We hit this on last Monday as a resistance before it found support, and the same thing has happened here, the first real retest of that. Keep an eye back on that $30 handle. That's likely to provide an opportunity where people would be identifying another area to get short this market, which has been drifting lower from the futures open as well. The dollar is down today, euro dollar higher. Of course, the Fed cutting rates an hour before the open by 100 basis points. 9-1 Mester, the only dissenter who wanted 50, and the restart of QE as well. This has seen some dollar weakness, but it has been choppy. We have seen some dollar strength return over the last hour or so, only to rebound back. Keep an eye on this level as well. Looking longer term at some of these charts, obviously you're seeing certain markets come down where usually you'd expect them to go higher. Gold this morning breaking through 1500, and off that high that we had just recently last Monday from 1700, we are now 13% lower. Other markets which have come under considerable pressure as well. Silver, since the high that we had back on the 24th of February, is actually down 35%. Gasoline, obviously following oil suit, is down, lowest levels since 2002 there for gasoline. So a lot of these markets still coming under pressure. Still feels like the worst is yet to come. Another choppy week perhaps expected. 4% moves every and which direction. Yes, last week in the S&P. Will be very interesting to see what happens on the open. Expected down to be around 8-9%, which of course would trigger that next circuit break limit down 7%, where price can go no lower for at least 15 minutes.